Hello again, this is Andrew Westhof, owner and senior loan officer of Homes Mortgage Lending, and this is your interest rate update for July 28, 2022. If you're in the market to purchase a home and you want to keep an eye on what interest rates are doing, please subscribe to my video and turn on the notifications. I'll be doing these weekly or bi-weekly, so you can keep an eye on what's happening in the market as you continue your home search. And if you're located in Michigan and would like another option for a lender, someone that's knowledgeable and has really good pricing, please don't hesitate to reach out to me. All of my contact information is listed on the screen now and will also be in the video notes. So without further ado, one thing that you probably saw is the Fed increased the interest rate 0.75 percentage points. I know it's got a lot of people that are in the market currently or soon to be in the market to lock an interest rate in pretty nervous. But really good news, interest rates actually came down pretty significantly after the Fed announcement. So the reason for that is that we knew the Fed was going to raise the interest rates. The rate that the Fed raised is the rate that they charge other banks to borrow money from the Fed. So it's not directly related to mortgage rates, but it's very correlated. But we already knew that they were going to raise it, so we already had it priced into the market. And in fact, there was some concern that the Fed might raise rates 1% or even 1.25%. So that risk went away when they raised it 0.75. So the risk that was priced in went away, which is why rates came down. And also we got a little help on interest rates for mortgages because GDP numbers came out negative, a drop 0.9% this morning as well. So the fear of a recession and the fact that the Fed didn't do anything crazier than what we already thought they were going to do are why rates actually came down. So today at Homes Mortgage Lending, we're at 4.936%, 5.0556% APR on a $375,000 purchase with 20% down, 740 plus credit score, 1 unit single family primary residence on a 30-day lock for a 30-year fixed conventional loan. So I'll show you what that pricing looks like in just a moment, actually right now. So this is what pricing looks like today. This is what you would actually be able to lock in with my company currently. 4.936% rate, 5.056% APR, and then I used estimated property taxes and homeowners insurance. The property taxes I estimated based on a home in Ann Arbor, Michigan. I will send you a link to the state's website on where you can estimate property taxes where you're looking. What I like to do is use 48% of the purchase price for the estimated SEV. So if you put in the full purchase price, it's going to be like double what the actual property taxes would be. But I'll send the link, and when you click on it, it's pretty straightforward how to use it. If you have any questions, feel free to reach out to me. But you're putting in 48% as an estimated SEV of the purchase price. It really should be 48% of the appraised value, but we don't know the appraisal yet. So usually you figure it's going to appraise for about what you pay on the purchase price. And then you'll plug in the county, the city or township or village, and then the school district. So what that shakes out to be with Ann Arbor taxes would be about $91,414 out of pocket, down payment and closing costs and money to set up the escrow, and then a total payment of $24,448.75. So that breaks down to be $1,598.75, so just under $1,600 for principal and interest. Now I know not everybody's buying a $375,000 per home in Ann Arbor and putting 20% down. So if you are buying it in a different price range, to give you an idea, at that 4.936% interest rate, for every $100,000 you borrow, that's $532.92. And then for every $10,000 you borrow, that's $53.30. So just if you want to do some math. Now what you should be doing if you're pre-approved and looking for homes, your loan officer should be running numbers for you on any home that you're thinking about making an offer on. And again, if you are in the market in Michigan, I'm licensed anywhere in Michigan. So if you are not getting that service from your current lender or loan officer, I would be happy to help. Or if you just want to compare apples to apples with a few lenders, which is always a good idea when you're making probably the biggest purchase in your life, feel free to reach out. I'd be happy to assist there. So I want to show you something else too, just to show you, because I know I just told you interest rates actually dropped, but this is today, 4.936. This is yesterday. I purposely priced out the same exact scenario right before the Fed announcement because I wanted to see what that difference would be. 5.393%. So what that looks like in terms of difference on payment, 1683.28. Having a really tough time with the highlighter today. Sorry, folks. Get it good enough at least. So 83.28 versus 1598.75. So 1683.28. I want to see the difference. 1683.28 minus 1598.75. 1598.75. $84.53. In the matter of minutes, basically. Once the Fed made the announcement, the rates dropped pretty much immediately. So this just kind of shows how volatile the market is right now. And one other thing that is happening is, so there's some concerns about recession. A lot of the interest rate gurus out there expect rates to kind of continue to drop, but they're moving up and down a decent amount every single day, often multiple times a day. We're also going to get inflation numbers on Friday, which they keep going up. So I'm a little concerned that those might go up and we might lose some of the gains we've gotten basically just today. So if you are in a situation where you have an offer accepted on a home, if you're not one to gamble, now is a good time to lock in my opinion. So one other thing I just want to show you, because I show it on all of these videos, but it's not as relevant today, but I'll show you anyway, the Freddie Mac numbers for their survey. So every Thursday, Freddie Mac does a survey. They survey a bunch of different lenders, banks, credit unions, large retail lenders, brokerages, and they come up with averages. So you can see that these rates are quite a bit higher than what I just showed you on my fee worksheet. And a lot of that is because these are averages over a week, so they don't have as much of the drop from yesterday afternoon and today priced in here, but you can still see the overall trend. So about 3 weeks ago, we kind of dipped, and then we went up 2 weeks ago, and we were pretty flat week over week from to last week, and then this week we dipped it again. So we're kind of about where we were about a month ago. So hopefully that trend downward kind of continues, but there's certainly no guarantee they're going to go one way up or down. So if you have any questions, please don't hesitate to reach out. Again, my contact information is going to be in the show notes. I'll leave the link to this Freddie Mac survey in case you want to keep an eye out on what rates do each Thursday. And then I will also put in the link for the Michigan, if you're buying a home in Michigan, the property tax estimator. One thing to note, there's a video in my library if you're curious and you want to take a look, but when you're looking at homes, property taxes in Michigan are, there's a cap on them. So almost always the property taxes are lower, often by quite a bit, than what they're going to be soon after the home is sold. So it's a good idea to get an estimate on what those taxes are going to go to. Don't just rely on what the current property taxes are, because you're going to be in for a shock 6 months to a year after you buy the home when those property taxes go up substantially. And if you have any questions on that, reach out as well. So I hope this was helpful. Thank you so much, and keep your fingers and toes crossed that the trend continues for rates to keep coming down.